Hello and welcome to the program. The National Bank of Ukraine recently released a report on what the economic expectations might look like in 2018. What are the challenges awaiting Ukraine's financial landscape for the year to come and how to deal with them? Joining us in the studio to discuss economics in 2018 is Viktor Koziuk, Council Member of the National Bank of Ukraine. Thank you for joining us. So, first question, before looking to the future, let's have a look to the past. And according to experts, global growth in Ukraine has been disappointing. Why? What are the factors? Why is that so?
Thank you. It's a very good question. Traditionally, countries with low income per capita should grow faster than developed countries, and that is why Ukraine is always looked as a country that should grow faster, especially taking into account deep decline in GDP in recent years. But in the same time, all our neighbors expect to grow faster, and that is why a lot of experts take the numbers of Ukrainian GDP growth as very disappointing. Yes, I agree that such numbers are disappointing from, let's say, real convergence approach on what GDP growth should look like for such countries like Ukraine. But in the same time, we should also take into account that a country in the war, country meet a lot of challenges, how to reform, how to make structural changes, how to improve institutions, and all of such factors are still restraining the higher GDP growth. In the same time, I should say that even if we take into account supporting factors, let's say commodity prices on the global markets, how they favorable? Formally, yes, but we also should be aware that favorable global factors like commodity prices very often not add in growth, but rather introduce some obstacles, how to change institutions, how to make reforms, how to invest in more productive sectors that are outside of commodity sectors.
And we'll go to the reform problem in a minute. But is there a risk that Ukraine might meet the same problem, the same restraining factors in 2018?
Yes, very restraining factors is for me, it's great expectations about electoral cycle. Next, very important is that external debt redisbursements affect the challenges, affect the expectations about possibilities of Ukrainian government and Ukrainian Central Bank to support such payments without any substantial decrease in exchange reserves and any substantial decline in exchange rates. Of course,
we'll go to the international and external debt just in a minute. But let's focus on the reform here. So we were saying that because we're in a pre-election here. So this political pressure will stop reforms? That's what you're saying?
I guess it's a problem of bargaining. The closer to elections, the bargaining become harder and harder, and politicians meet the problem how to reach the compromise, and price of such compromise are getting higher. So I guess this is it's a traditional for democracies, let's say, but we also should go that way. But in our situation, such bargainings are very expensive for the economy.
Yeah, because one might think that for someone to be elected, this reform has to be pushed and have to be pushed further.
Yes, but currently structural reforms undermine that there be redistributional in some case, and of course parties that expect to decline of their wealth may be explicitly for reforms, but implicitly against them. So we have very interesting political landscapes about reforms facilitation, and due to that, economic agents receive very disappointing signals about investment, about perspectives of Ukraine, and also altogether it affect competitiveness and thinking about future of investment. So I guess electoral cycle in Ukraine in many cases is restrictive.
Which brings us to the external factors now and the external debts, because this lack of reforms might look bad with the IMF or the EU, who might cut off some loans like they already did with the past. So as Ukraine is quite dependent of external resources now, how to settle this situation?
Look, why it is also very necessary to look on this problem in the context of reform, because reform are expected to increase attractability of Ukraine from foreign direct investment inflow. And of course, large amount of foreign direct investment support to finance balance of payment. And if you ask what is better, to finance balance of payment through foreign direct investment inflow or through hot capital inflow, of course foreign direct investment are more attractable.
It's also stay.
Yes, and they sustainable, and they undermine additional investment, additional consumption for labor, and they bring technologies, let's say. So from a macro and micro point of view, foreign direct investment much more tractable. But also, if we are speaking what limit, what restrain such foreign direct investment attractability. So all these challenges are related to what should be reformed.
So the core of the problem is still there.
Yes, the core problem still the stay. So that is why when we look at the balance of payment problem and external finance independence, we also should take into account that foreign direct investment attractability is the core to structural changes.
Now, well, let's stick with the EU just for a moment. The multiplication, the increase of agreements with the EU might affect the quota and the export and import in Ukraine. How these quota in 2018, how it will affect the life of, let's say, ordinary Ukrainian? Because maybe will it lower the prices or the inflations, or will it just go up?
If we're speaking about agreement with EU about free trade area, I guess that the direct trade channel is really overestimated for Ukraine, because EU mostly and Ukraine are on the different technological stages and on the different stages of economic development. So that is why direct trade channel, as for me, is overestimated. But foreign direct investment, I guess it is more important, and the different steps to liberalize trade and capital movement is more important to attract foreign direct investment. But in the same time, force majeure factor like war substantially affect possibilities of Western companies to invest. It is not also the problem of attractability, but it is also the problem of elasticity of foreign direct investment inflow, and such elasticity.
Can you explain, because some of our viewers are not necessarily specialists in economics.
Okay.
Just a quick explain of this elasticity of.
I mean that for a lot of number of investors, country risks and geopolitical risks are still important, and that is why Ukraine should find something to make additional attractability of the country. And when we're speaking about such kind of additional attractability, we should stress on more and deep and comprehensive reforms. And also, this also means that price of bargainings also goes up. So I guess this is important, because geopolitical factors affect the general possibility of Ukraine to attract investment in more different areas. So I guess such factors are still important.
Yeah, because obviously the conflict is not going to end tomorrow. So Ukraine should definitely.
Yes. That is why if we should let's say, for example, decrease the taxes on a 2%, with war we should decrease them in 5%, something like that.
So it adds up to the calculation, basically.
I say it as an example. Yes.
So we talked about the restraint and the problem, but what are Ukraine's assets today?
Situation currently is not dramatic. Let's say it is not 2015. But in the same time, Ukraine's current situation is challenging, because from challenging to dramatic situation, let's say a few steps. And I suppose that more restraining monetary policy is a solution how to invest attempts to receive more stable macro-financial environment for reform.
So when you're saying more restraining money policy, do you think austerity, for example, or more control of the money?
I don't think that fiscal policy follow austerity way, let's say. In the same time, we have a budget deficit on a level of 2.5% of GDP. Is it high? Compared to Greece, that under...
You're sure it's a good example to take?
Yes, that under strong pressure from Troika, yes, it is high number. But if we're speaking about possibilities to finance such level of deficit, taking into account problem with balance of payment, I guess that it is high numbers, and government should go there with some kind of austerity, yes.
So the thing is, with austerity means also less social spending. Does Ukraine really need less social spending now?
Also very challenging and contradictory situation, because currently we may observe a situation with a strong labor market adjustment, because labor mobility is increasing. And of course, government should react on such situation, because previous level of salaries was enough low. But in the same time, when we see how the salaries are increasing as a response for labor market adjustment, labor mobility, we may see that some kind of gap is occur between salaries hike and productivity of economy. I guess by a few months, let's say by a few years, we may meet very big problem with the competitiveness. And I suppose that the government should think how to implement structural policies that would be consistent with such labor market adjustment. And if we're speaking about social expenditures, of course, then the labor markets goes up. Social expenditures also should be corrected. But in the same time, if we're speaking about the amount of total social spendings, we should add efficiency of such spendings, and this is require structural changes in the fiscal policy.
So to sum up and to conclude, my understanding is that the main point is reform and keep reforming, even though it's an electoral cycle, and inefficiency to attract foreign investment.
I may answer in the next way. A lot of done, but the much more should be done. So that is why we are not optimistic. We are closer to a realistic vision of what is going on, and then situation are challenging, troubling. For monetary policy is the best solution to be more tight.
Well, thank you very much. It was a pleasure to have you in the studio to talk about the expectations of 2018.
Thank you.
Thank you for watching the program. This was Viktor Koziuk, Council Member of the National Bank of Ukraine. Stay tuned for the rest.